Hello and welcome to CryptoWeeklies. My name is Josh. Today we'll be talking about AAVE conducting its AI-based forecast, regression analysis, and much more. Starting with the indicators over the last 24 hours, the crypto TLDR news, most of the narratives are bullish. Couple of bearish narratives, one related to Bitcoin facing a resistance hurdle and its valuation in 2024, and the other one related to XRP and its price drop amid bearish indicators. Or the other side is the XRP's war on uncertainty, and then one bullish narrative related to ETH, um, sentiment on consensus, and related to SEC approving ETFs related to ETH, and then one another bullish narrative related to Ripple's CEO and AI music platform attracting some attention, and one another related to Sheep. So you can check each of the narrative on the website on the bottom of your screen. Coming to the composite risk score, the peak valley, a normalized risk reward between 0 and 1. The key idea that is that when the risk scores are low, that's a good time to get in the market, and when the risk scores are high, historically speaking, that has been a good time to get out of the market. This is not financial advice. Right now, the risks are, this is top 100 cryptos by market cap, checking their risks over the last 24 hours. The risks are going down. You can see the highest risk on May 20th was at around 0.29, almost 0.3 level. Now it has gone down back again to 0.27. The trend over the last since middle of March has been the risks have been putting some lows. Let's see if the trend has shifted starting middle of May. We'll update this risk. We are updating this risk score every single day on the channel. So if you want to know what is the current risk level or risk return trade-off in the market, you can see, and what goes into the risk calculation. The idea is to provide a single metric to quantify the all riskiness using the indicators such as factors such as volatility, alpha, beta, Sharpe ratio, and percent drawdown to provide what is the risk return trade-off at any point. So the key idea since February of 2024, the risks are in this yellow color zone. These are also color coded. When the risks are above 0.2 but below 0.4, that's when the color code is yellow. That is a hallmark of a neutral zone. When the risk are below this point 2 and between point 2 and point 1, that's the green zone. And historically speaking, DCAing in the market during green and blue zones have personally been beneficial. Halting DCA during the orange phases have been beneficial as well, and not DCing during the red phases or DCing out of the market during the red risk zones have been beneficial historically speaking as well. So let's now get started with the narratives or the popular narratives over the last 7 days. We are looking at what has happened over the last 7 days, and the discussions summarized using our machine learning model on YouTube and X related to crypto the last 7 days. You can see the approval narrative has been the most popular. If you have been following the narrative wall, you can see that this particular narrative was not present before the last 2 to 3 days. You can see even approved and approval, kind of similar narrative related to Ethereum, and then Ethereum is in its own has a bigger narrative presence than it had since the last 7 to 8 days. In terms of trading and Solana related, another narrative gaining popularity related to ETFs again, and Bitcoin is still the biggest narrative. And with Ethereum's ETF approval, some of the altcoins are also gaining some attention. And then particularly the altcoins such as Cardano, and over here other parabolic rallies, and also XRP is also garnering some attention. uh, people are also discussing about the vote related to a bill related to crypto. So this is just one single snapshot of what is happening in the wider crypto market, which narratives are gaining popularity, what people are talking about. This is the word cloud, created using natural language processing and machine learning techniques. So this with this in mind, we'll just check Aave if the on our portfolio builder, the mid-cap code portfolio builder, if our Aave has a presence. Unfortunately, it doesn't right now, but this is again calculating the price actions starting the bear market, that is 2021 December. These are the optimal mid-cap portfolio allocators created using machine learning and AI. So now we'll look at Aave and its own forecast graph that we have created today. I think we trained the model, the machine learning model, on price action starting October 2020 till about May 26th of the week of May 26th of 2024. Right now, today on May 24th, we have data till the current week, which will end in May 26th. Currently, the average price for this week at around, you can see the price for Aave over here. This is Coin Market Cap, is at around $99. So, with this in mind, the base case scenario, the bull case scenario, and the bear case scenario forecasted by our model, the bull case in green, the base case in the line in middle, and the bear case is in yellow and red zone. The bull case for Aave between now, sorry, the base case for Aave between now and end of October of 2024 is price action between $100 and around $120. That's the base case forecasted by our model. If crypto has a wider slump, then the price action could be between $50 and $97. That's the bear case, and the bull case is between $126 all the way to about $370. And these forecasts are not financial advice. This provide us with a theoretical ceiling with one standard deviation accuracy and a theoretical floor with one standard deviation accuracy. Those are the bull case and bear case extremes. And all the bull zone is all of the price action in the green zone, and the bear zone all of the action in this yellow zone. So this is our AI-based forecast for Aave, and now we'll just look at, and this is also available in a tabular format as well if you are interested in that on the website, and discerning whether Aave is overvalued or undervalued using the MVRVZ approach. The key idea is as the red line is below this zero cutoff, that means Aave on its MVRVZ based price evaluation is undervalued at this moment. Aave has been undervalued starting all the way to about June, July, June or July of 2021, when the price was at around $202. But again, if you compare what the bear market lows were at around $50, you can find that the MVRVZ also bottomed at around that level. So this MVRVZ is soon approaching zero. That means if and when um, the red line crosses zero, at that point in time, Aave will start being fair valued or slightly overvalued. So just wanted to highlight where Aave lies on the crypto discernment. And then let's last but not least look at the regression bands for Aave. We'll first look at the fair value for Aave. We'll get rid of the other bands. And this is the price of Aave, the white line, and then on top of it is the polynomial regression function in pink color. Right now, this polynomial regression function says that the fair value for Aave is at around $87, whereas the price as action is at around $98. That means it's slightly over the polynomial regression base function. But if you are interested more in knowing about what is a one standard deviation upside and downside for Aave at this moment is at around $110. Uh, and then and in terms of one standard deviation floor is at around $68. So those are the first key levels, because as you have seen historically, the market price action is within the 70% of the price action is within these confidence bands or one standard deviation residuals applied to the polynomial regression function. If you want to know what is the two standard deviation peak and bottom, that is in these are our heat bands. As the heat levels increase or decrease, the color code changes from yellow to orange and then ultimately to red. The two standard deviation peak for AAVE is at around $140 right now. And one standard deviation, sorry, two standard deviation bottom is at around $53. If you want to go even further and look at three standard deviation peak for AAVE, which is again about 99% confidence that price does not go beyond these price points at any point. You can see only once the price action went above these three standard deviation peak. Currently, that three standard deviation peak for AAVE is at around $180, and equally speaking, a $44 AAVE would be a three standard deviation bottom, which is again has never been challenged thus far. So just wanted to highlight what are the key levels for AAVE. AAVE, just to forecast, just to summarize all the forecasts and analysis so far, per the regression bands, the key levels to watch ultimately with the one standard deviation approach is at around between $113 and $110 and $68 price action between that. In terms of whether it's overvalued or undervalued, slightly undervalued thus far, has been undervalued for about 2 to 3 years. Um, in terms of its forecast, the base case between $100 $120 for Huawei going forward to October, the bull case between $126 and $355, and the bear case between $50 and $97. So hope you like this content. If you did, please subscribe to the channel and also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.